So this is part 3 of the Lending 101 video series, where the first video we talked about our pre-purchase dreams and goals call, which is a call we have with our mutual clients that we work together on in terms of learning more about them, asking good qualifying questions, and then after that, trying to craft a personalized mortgage strategy for them. We go through that approval process. And then in the video number 2 that we talked about was having our mortgage planning session, which is typically a 30-minute Zoom meeting that we have with our clients to go over the fact that they are approved now, what that means, state of the market, why it makes sense to buy now versus wait later, and all of the kind of educational aspects of making sure that the biggest financial investment they're going to make in their life, that they feel good about it. And so after that second mortgage planning session, weeks, months, even years can go by from where we come into in this video, which is in video number 3, we're going to talk about the pre-offer consultation. So now we have a buyer who is interested in making an offer, and we want to have a strategy between, me as the lending partner and you as the real estate professional to make sure we're putting our best foot forward for our mutual buyer here on their offer. And during this what we call pre-offer consult, we can do it on phone, via phone, Zoom's great, but we want to ideally get together, agent, lender, buyer, and talk strategy. What specific on this property do we need to be aware of? Are there multiple offers? How much is the client going to put down? What's their cash to close situation look like? Now, with the NAR changes where the seller doesn't have to pay for the buyer's agent's commission, we need to find out relatively quickly, is there a buyer's agent compensation being offered by the seller? If not, or if that amount they're offering is not enough to cover the agreed upon buyer's agency agreement that you've provided to the buyer and they've signed, we've got to figure out some strategies behind that as well, which is what you're looking at on the screen. And so during this pre-offer consult, we want to make sure, can we do a quick close? Do we need a quick close? Can we waive financing? Are there anything about the property we need to be aware of that could cause maybe inspection issues or financing issues? Maybe it's a condo and there's a little bit more complexity to a condo offer. Do we know the real estate agent that's representing the seller is a listing agent? Do we have a relationship there that we can leverage in a multiple offer situation? Is there another lender involved that I need to be aware of where we've gotten the buyer's commitment, but they're still shopping around and they're talking to an online lender? We'll want to discuss that during the pre-offer consult, because at the end of the day, the lender that the buyer works with matters, as you know, and it's important that they're working with a local lending team that can get this done, do it quickly, and reputationally is going to make sure that all aspects of the transaction go smoothly. And that's a huge part of this process. And so as we go through this call or this Zoom, if it's brought up that there is a compensation issue potentially at play, that the seller will not pay your buyer's agent's commission or not enough, we will look at how to protect your paycheck here and provide different compensation options. I'll go through this quickly, but let's say the seller, in a normal environment, the seller would pay your commission as a buyer's agent, which maybe right now that's kind of 2.5% seems to be the current norm. So in option 1, let's say the buyer's going to buy a $750,000 house. Here's your loan amount, rate, payment, cash to close, $86,000 out of pocket. In this option, the seller is just doing what we hope they'll do, which is I'm going to pay this 2.5% buyer's agency commission to bring a buyer to my home. Great. In option number 2, maybe now we're in a position where the seller will not be paying anything to the buyer's agent. Well, that's a problem. If you want 2.5%, we have to figure out how we're going to make this happen so that you're compensated for your time. In option 2, we could finance it into the loan. Maybe the buyer will just simply put less down. In this example, they were going to put 10% down. Maybe they decide to put a little less down, increase their loan amount, which you can see here. Rate's the same. Their payment goes up to $5,020 versus the $4,902 it could have been. But their cash to close is the same because all we're doing now is they're actually paying your commission out of their own pocket, but they're putting less down now than they originally maybe thought they would. So they've increased the loan amount, which caused their payment to go up a little bit, but their cash out of pocket's the same. You get compensated, and they're okay with a slightly higher monthly payment to make this work. Option 3, let's finance it into the sales price. If we collectively, as part of our pre-offer consult here, do not think there'll be appraisal issues, what about bumping up the purchase price? Then the seller will agree to cover your commission as a buyer's agent, and that payment is $5,008 here in this example. The loan amount's a little bit less than option 2, but the cash to close is a little bit higher. We have bumped up the purchase price by 2.5% to get your 2.5% commission, and this could work better for a buyer from just getting a slightly lower payment than option 2, but a little bit more out-of-pocket cash. Again, the caveat being we don't think there'll be appraisal issues because we've bumped up the purchase price now in the contract to $768,000, $750,000 in order to have the seller provide a 2.5% commission to you as a buyer's agent. Option 4 would be that maybe this buyer's got cash. They don't want to bump up the purchase price. They don't want to bump up the loan amount and put less down. The seller's not willing to pay the buyer's agent's commission. They would just say, fine, I'll just pay out of pocket. That's why their cash to close is a lot higher. They're paying the $18,750 commission out of pocket. That's an option 2. There's a 5th option, which is, I couldn't show it on the screen here due to only being able to show 4 options. The 5th would be maybe the seller is saying, I'll provide a 1.5% buyer's agent's commission. But your contract that you want for your time is you want 2.5%. Well, the seller will provide 1.5%. How are we going to cover the extra 1%, that gap difference? We would do a combination of, or one of these options, of either option 2, 3, or 4. Same concept would be, how do we get the extra 1% handled so that you get the full 2.5% you're expecting? 1.5% from the seller in that example, that's the max they're willing to pay. And then we would want to make sure we figure out a creative way to get you that extra 1%. And that would just be, again, a combination of figuring out option 2, 3, or 4. Okay. This pre-offer consult used to not be something we did in our industry. We're now asking any agent we work with, when the buyer wants to make an offer, that we strategize. It doesn't need to be a long phone call or a Zoom, but we want to go through this and make sure that if the buyer's going to pay your commission, do they actually have the cash? Because the loan approval now is going to be dictated on a lot more of this stuff from an out-of-pocket standpoint. If the seller's not going to pay the commission, the buyer needs to somehow for some reason, then it's important that the lender knows this and that we have documented enough cash to close and that the buyer's on board to do that, because otherwise we can have fail sales if we don't communicate, and now there's a bigger cash out of pocket that we didn't document, or now they're scrambling to try to get a gift from family to make the cash to close work, and now we're jeopardizing close dates or doing a mad rush. We want to all be on the same page when that offer is submitted so that we're not missing anything and we're structuring and strategizing this the best way. So this is video number 3 in the Video 101 Mortgage series, the pre-offer consult. In the next video, we're going to talk about video 4 is clients in contract, what happens next. Looking forward to sharing that with you next week. Have a good one. Take care.